Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Ron Plain analyzes strong gains in lean hog futures. Al Dutcher gives us an extended spring weather forecast. Monte Vandeveer discusses 2014 crop insurance options. And we learn how farmers in Brazil use futures contracts to protect their margins. University of Missouri Extension economist Ron Plain is our marketing analyst this week. The most recent porcine epidemic diarrhea virus numbers from the American Association of Swine Veterinarians shows there have been about 4,000 positive tests for PEDv in the United States. The confirmed cases have risen since the start of 2014, with February featuring the 4 highest totals. It's obviously been a major issue for hog producers, and significant losses could impact feed demand. Take soybean meal, for example. Animals consume nearly 98% of U.S. soybean meal, a product that has helped fuel the overall soybean market recently. While there isn't an accurate count on PEDv death losses, perhaps the recent rise in lean hog futures shows the market believes it could be a large number. The April lean hog futures contract added $7.50 last week, and when we talked with Ron Tuesday afternoon, it had put on even more.
It's amazing, Jeff. We've been at record prices for some time, and we're going up fast. Up the $3 limit today on the April, May, June, July, and August contracts, each one of them well into record territory, and no signs that we're going to stop this anytime soon.
Last week it put on $7.50 on that April contract. What do you attribute it to, Ron?
Well, there's 3 big obvious things. First of all, a concern over the PED virus. Expectation is that slaughter is going to be down sharply spring and summer, and will give us high hog prices also as a result. The fact that we got beef at record levels. Competing meats are high, and so that's going to help out grocery store pork prices. The other thing is looks like Russia is going to be back in the market. They've been out for a little over a year, and I expect them back buying U.S. pork here later this month, and so strong export demand's the third factor.
The international disagreement there between the U.S. and Russia over Ukraine wouldn't play a role in that, Ron?
Well, it might, but what Russia's doing is stopping their purchases from the European Union. That's where they've been getting a lot of their pork for the last 12, 14 months. They haven't been buying from us. And the Russians are equally upset, I think, if not more so, with the European Union over the Ukraine situation. Plus, the other thing is that the European Union has had a few cases of African swine fever, so it leaves Russia in not a real good situation. They need to bring in pork from somewhere to have enough meat for their consumers.
Tell me what sow slaughter numbers have been like. Keeping it back would lead to maybe thoughts of expansion.
Yes, Jeff, we've been killing sows at a slower pace. Our gelt slaughter data also indicates we're expanding the breeding herd, and we expect that to continue. Profit outlook is very bright, and with the PED virus reducing pigs per litter, so yes, we think the sow herd is growing at this point in time.
On the flip side, for feeders, corn is starting to rise a little bit and soybeans have risen a lot, and that's been fueled a little bit by soybean meal. Talk about what that's doing to margins.
Yes, we've seen some rally in corn prices, still far below year-ago levels. Interestingly, even though soybeans are down, soybean meal has been steadily higher than a year ago during this winter season. It's worth squeezing margins a bit on the cost side. We're not getting quite as cheap break-evens, but we're looking at live break-even hog prices around $62, $63 a hundredweight. That gives us a break-even on a carcass basis somewhere around $83 a hundredweight.
You know, we talked before we went on about if you were using that futures market, and if you did it before this run, it probably wasn't a good thing, but is there anybody that's willing to play now and think that maybe this is a high?
Well, you know, a lot of the traders like to go with the trend, and the trend has been steadily higher. Anyone who said, gosh, record hog prices are good enough and sold a future contract would have faced some sizable margins if that was very long ago. We're going to top out at some point, but right now all indications are we're going to move higher first.
How much higher can it realistically go, Ron? Do you think we can put another few dollars on this market?
I think so. If you're up $3 limit on a bunch of contracts today, we're probably going to be higher tomorrow. There's some talk we may see futures reach 120 before they start to slide back down. It's you know, we're in uncharted territory, so it's difficult to speak with a great deal of confidence.
Understood. You wrote some interesting things about U.S. pork demand in your recent write-up, your weekly write-up. Tell me about the state of U.S. pork demand.
Well, we were up a bit in meat demand, pork demand included last year. That's a good sign. Over the last 15 years, though, pork demand, domestically at least, is a little bit softer than it was 15 years ago. The big thing on the pork side of things is exports. A huge increase in export demand for U.S. pork. That's really what's allowed the industry to continue to grow. Our expectations is that we're going to continue to see strong performance there. Domestically, a lot of that just simply depends on the economy. If more people could get jobs and generate more income, we'd see stronger meat demand.
One of your notes was that overall meat demand here in the U.S. In 2013 was up 3%. It's the highest level since 2007, which would have been before the recession. My question would be, what are pork prices doing relative to what beef and chicken prices are doing if that would continue?
Well, last fall, all four meats were record highs in grocery stores. Our expectation is that with the PEDv virus tightening supplies, we're likely to see a bigger run-up in pork prices, certainly than poultry prices. Expectation is more chicken on the market as we move through 2014 and a little bit softer broiler prices and fairly steady turkey prices. Beef, on the other hand, seasonally, we should start to see some price decline in beef prices in grocery stores once we start to get to summer.
We should note the USDA is scheduled to release its March crop report at 11 o'clock Monday morning. Our market analyst next week will be Darren Newsom from DTN. We'll look at those estimates and discuss how corn and soybean markets might move before the two big reports on grain stocks and prospective planting acres are released at the end of the month. It has been an undeniably cold winter in Nebraska. UNL Extension state climatologist Al Dutcher says on a statewide basis, Nebraska has recorded about 20 days with below zero temperatures this winter. A normal winter season would feature about 5 days in southern Nebraska and 10 in northern Nebraska. As spring arrives later this month, the question becomes, how long will below average temperatures linger? We sat down with Al Thursday afternoon for an extended weather forecast.
Essentially, when you compare this winter to last winter, eastern Nebraska running anywhere from 4 to 7 degrees below last winter's temperatures. Western part of the state's caught a few of those warmer days than we have in the eastern part, and they're running anywhere from 3 to about 5 degrees below what we seen last winter. Snowfall, we're right about what we were last year, except for northeast and portions of north central that have missed out on the major snow events that have crossed the southern part of the state, but a lot of winter left, unfortunately.
Right, let's move to the west before we get into spring and look at the central Rockies and the snowpack there. First of all, tell me why that's important for producers here.
Well, there's two reasons. One, of course, is irrigation water. You know, we're talking about the water that's going to help fill up the reservoirs on the northern branch of the Platte. So when we look at the capacity of that system, holds about 4.5 million acre feet of water. Right now, we're running about 50% of capacity, so there's room for about 2 to 2.25 million acre feet of water. So when we look at that snowpack, we're looking at the snow water equivalency of it. Latest reading as of yesterday, essentially running 135% of the snow water equivalent. That's the water in the snowpack, not the snow. In north central Colorado, in south central Wyoming, 120% of the normal snow water equivalency. What does that mean in terms of comparisons to a normal year? Typically, we don't reach these levels that we're seeing with the snowpack until we get to the peak of the season, which occurs late March, early April. So we're a full month ahead. As long as the snows continue, we're going to have a tremendous runoff potential. But more importantly, bigger the snowpack, the longer it takes for it to disappear. And we usually see good thunderstorm development along the front range of the Rockies as we start to see the temperatures along the plains region warm up, and those thunderstorms tend to roll east during the overnight hours and provide us with a very valuable source of moisture when we don't have frontal boundaries coming through the state during the peak of the summer period.
Let's look ahead to spring and first just talk about temperature. Will these colder than normal temperatures that we've seen so far this winter continue into spring?
As long as we can pull this warm air up into southern Canada, I would say that there's a very good likelihood that we'll be below normal in regards to temperatures. Right now, we should have highs in the state pushing the mid to upper 40s, and by the end of the month, around 58 to 60 degrees. So even if we're getting in the 40s, which sounds pleasant compared to what we had a week ago, we're still running 7-8 degrees below normal. And as you go to the north of us, it's worse. We've got 3+ feet of ice on many of the interior lakes of northern Minnesota. So, you know, for that ice to get out, it's going to take a while. And that's going to have a moderating influence. Basically, it's not going to allow us to get gung-ho too warm. Secondary is how quickly will it warm up and how much moisture is going to come flowing out of that snowpack and how much flooding concerns are we going to have to the east of us. Not so much here in Nebraska, but all those things could conspire to really make this a messy, messy spring period for planting.
Do you have an impression that it is going to be a wet spring as well?
I think so. You know, I know a lot of people are concerned that we've had a lack of snow. Really 7% on average for our annual precipitation falls from December through February. What I look at is how many frequent frontal boundary passes are we getting, and they're coming anywhere from 1 to 3 times a week. As the air gets warmer, it holds more moisture, and when you get 25-degree temperature swings behind a cold front, generally we have either a pretty strong snowstorm or we have some pretty extensive thunderstorm activity.
Quickly then, that would indicate that soils might take a little longer to warm up than normal.
Most definitely, most definitely. We'll thaw them out here in the next week to 10 days, but it's going to be a slow process building that heat deeper into the profile.
Al will return later in the show to forecast the coming week. There's sweet corn and then there's sweetened field corn. In the March Nebraska Farmer, Dennis and Rod Valentine of Fairfield explain why they apply a foliar sugar solution to their corn crops. The brothers haven't found a yield advantage from the treatment, but say they've seen an increase in stalk strength. UNL Extension educator Jenny Reese has witnessed similar results in field tests, but scientists don't fully understand the interaction of the sugar treatment and stalk strength. Reese believes early applications of sugar to corn might increase microbes that may keep exposed brace roots and stalks healthier. You can read more about this unique treatment in the March Nebraska Farmer. The projected prices for this year's crop insurance have been set based off futures closing marks set during the month of February. The projected prices are $4.62 per bushel for corn and $11.36 per bushel for soybeans. Both are more than $1 less from levels last year. UNL Extension crop economist Corey Walters and UNL Extension educator Monte Vandeveer authored a report on how farmers can use those prices to make management decisions. We talked with Monte Thursday afternoon. The levels that we're seeing this year, they are dramatically lower than last year.
It's a big drop. We had some pretty high numbers, gave us some good revenue protection last year. So now we're going to be, 15% lower. Both for our revenue coverage on both crops. The upside is it makes the premiums cheaper too.
Why would a producer might think about, or why would he maybe want to think about using a revenue protection insurance option?
Well, the RP plan gives you the upside for prices. You know, the RP has two different price triggers. One is a projected price that we've just set in the spring, but if the price goes up during the season, and the average price during October is the harvest price, if that price is higher, then you get the higher of those two to calculate your revenue guarantee.
Tell me about the relationship between the coverage level that you have. Every 5% you found that there's a certain dollar percentage or a certain number of cents that would go down or go up.
Right. Since revenue coverage gives you protection on both price and yield, supposing yields were constant, you came up with your APH yield, you could get protection from the insurance just from a price drop. So I think last year's a good example. You know, corn, we had the sign-up price in the spring was $4.65. Well, harvest price came in at $4.39. That's a 22% drop. So if you had a 75% RP plan, you'd only need a 3% yield decline because you've to cover that deductible, because you've already had 22% on the price side.
Is this an option that historically producers, the revenue protection, is this an option that producers have used a lot in Nebraska?
Well, probably over 90% of our acres are insured under the RP plan, so it's far and away the most popular coverage among our Nebraska producers.
One of the quick and easy ways you found to figure this out this year, for every 5% decline in coverage level, it would reduce the crop insurance price floor 23 cents per bushel for corn and 57 cents per bushel in soybeans. So that's an opportunity for producers to kind of weigh out where they want to be.
Right. So say if you had the 85% coverage level, the maximum coverage, you only need a 15% decline to cover that deductible. So if prices fell 15%, and that would be a corn price of $3.93, for example, the revenue coverage would start to pay. So you get some price protection even if your yields hold up.
The important date for the sign up for this?
It's March 15th, so just a few more days.
The report from Corey and Monty can be found on the CropWatch website. We'll also link to that information on the Market Journal homepage. You may have recently seen our coverage on the soybean industries in Argentina and Brazil. We showed you last month how the countries have increased their soybean acres, the current challenges farmers there face, and future possibilities for growth. This week we'll look at how farmers in Brazil can use the futures market to stabilize their margins. BM&FBOVESPA is an exchange located in Sao Paulo. It lists two contract prices for soybeans, one in Chicago and the other at the port in Paranaguá on Brazil's southeast coast.
We are the exchange, so we provide for the farmers some products like protection instruments, like for example options and futures. So we have that for corn, for soybeans, for live cattle, corn and sugar.
How important is it for farmers to have something like this in Brazil? How do they use it?
Oh, that's very good, because they have the opportunity to sell in advance and to protect their cost of production and to guarantee their margin. So it's very important to use these instruments.
How are you using the Chicago Board of Trade numbers versus the numbers here on a Parana contract? Is that correct? Can you explain what that means?
Yes. So we have here in Brazil two contracts for the soybeans market. One is the the price of soybeans in Paranaguá port. So it's very helpful to have the idea of local supply and demand. And the other product that we provide is the Chicago price. So the producer, he has the opportunity to guarantee in advance this basis, the variation of the basis. That's mainly the difference between the Brazilian price against the Chicago price.
How volatile is that?
It's very volatile. We have volatility in that, and the volatility is like 20 to 30% per year. So imagine how this can give some problem to his margin.
How does the currency rate here in Brazil affect what the price would be in the country?
That's a good point, because as we are an exporter of soybeans, so we need to be very we need to follow the international price and our currency. If the currency is not good, but if the international price is good, in the local currency will be a good price for the farmer. So what we need to guarantee is that at least one of these variables is in a good path.
We know that the transportation here is a major issue, and we've seen it at the ports, and we know that farmers deal with it as well. From your perspective, why is the transportation so in need of repair or improvement? How does it affect this business?
Fact, because if we compare with US, we have one of our main production cost is logistics. So it's very expensive to bring the soybeans to the port. If we compare the same distance between Brazil and the US, we are much more expensive. So that's not good for the producer.
Do you know what percentage that would be of the cost?
5 times.
It's 5 times in Brazil than would it be in the US?
Yes.
So that takes a huge chunk of a huge piece of the profit that the farmer would make.
Yes. So imagine if we don't have logistic problems, we would add much more soybeans to the market.
How do you fix it? Is there any way to fix it?
No. Yes, it's one of the studies that BM&FBOVESPA is trying to study, is to provide to the market a freight contract.
Our full coverage from South America can be found through a special page on our website at marketjournal.unl.edu/South America. Next week, we'll show you our interview at an economic consulting firm in Sao Paulo about the history and future of agriculture in Brazil. Now, with his weekly weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. Last week we talked about that impending storm system coming in and bringing some Arctic air. The Arctic air actually arrived much quicker than the moisture feed from the storm system that come in through California. So the heaviest of the snowfall laid across the southern portions of Kansas up through central Kansas, and then kind of dissipated as you got up toward the Nebraska border. So what turned out to be a forecast for anywhere up to 6 inches of snowfall across south central and southeast Nebraska turned out to be a complete bust, and that is the nature of the beast at this time of the year. We did see some decent accumulations of snowfall across portions of northern, north central, northeastern Nebraska. Basically anywhere from 2 to 3 inches was very common totals. And then, of course, with the temperatures, we run for the first 4 days of the month, an average of 25 to 35 degrees below normal in terms of our average temperatures. So this recent little pop-up of temperatures the last couple days has been very welcome. Looks like there will be a little bit more as this weekend progresses, and then we'll see another wave come in during the middle of the week that will temporarily cool our temperatures down, and then we'll start to see a slow moderation as the week progresses. So let's take a look at the upper air models and see how this week will progress. And as we go to the upper air models, the troughing pattern that basically brought the shortwave energy through the state yesterday is now shifting toward our east, and you see this big ridge of high pressure starting to build in. So we're going to remain fairly cool, below seasonal norms for today, probably going to be looking at the upper 30s to low 40s across southeast Nebraska, potentially be looking at the low 30s across northeast Nebraska. But as you get farther westward, we start to tap into the ridge that's going to build in tomorrow, and so we'll see temperatures that should make it up into the 40s easily. Now as we get into tomorrow, we'll see that high pressure system rapidly move into our region. I would not be surprised whatsoever that we see a 70-degree mark across southwestern Nebraska. We'll probably be looking at upper 50s to possibly lower 60s across eastern Nebraska. Then as we get into Monday, in anticipation of this trough moving into the central Rockies, we'll still have the warm air aloft. It looks like the warmest temperatures will shift towards southeast and south central Nebraska. But basically we'll still be well into the 60s, and a much little cooler air up to the north, probably looking at somewhere into the low to mid 50-degree range. Now as we go into Tuesday, this trough starts to swing rapidly toward east, and that's going to bring another shot of cool air in. Now right now the snow line is being laid across the northern portion of the state and across southern South Dakota. This is a very tricky forecast because if this thing goes a little farther south, we're going to get into much cooler air. If it doesn't dive as deep it's going to be much warmer. But overall, we should see the best chance of snow across the northeast, north central part of the state, lesser amounts across the southeast part of the state. And as we get into Wednesday, that system moves to our east. We'll see a slow moderation of temperatures in the eastern part of the state, but much warmer conditions across the west. As we get into Thursday, we're going to notice that ridge starts to build in. It looks to be fairly benign weather as we end out the week, and then by the time we get to Friday, much warmer weather envelops the entire part of the state. So if we look at the temperatures, we're going to see some nice temperatures this weekend, a slow cool down in the middle of the week with the potential of snow accumulations on Tuesday, and then a gradual warming trend as we move through the remainder of the week. The 8 to 14-day forecast pushes the cold air to the east, warm air to our west, and in terms of precipitation, a fairly dry trend from the western United States through the southeast.
Thanks, Al. Our interviews from today, as well as our conversation about futures markets in Brazil, are available individually on the Market Journal website and the Market Journal mobile app as part of the March 7th episode. Next week, Darren Newsom will be our marketing analyst, and we'll show you our conversation with an economic consultant in Brazil who explains how Brazil increased its soybean production, but not its infrastructure. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.